right, we've got a couple more joining us, but we'll get started here right at the beginning of the hour. Thank you guys for joining us. We'll jump right in. So today we have Tecumseh Alternatives specializing in non-correlated alternative assets. And in this webinar, they're going to present a unique strategy on patent monetization. So this strategy involves purchasing patents or partnering with patent owners to pursue large corporate patent infringers. Tecumseh also has extensive experience in life settlement, litigation finance, and medical receivables, and we'll be happy to discuss that if there's any questions at the end. Other than that, I'm going to pass it over to Chad and Sanjay for the presentation. Chad, I'll let you get started.
Great, thank you, Ryan. Really appreciate it. Really appreciate the opportunity to speak to the group and present what we think is an extremely exciting investment strategy. And I'll just go ahead and kick it right over to the Sanjay Pant, who is the managing partner of IP Edge, who is the sub-advisor to the Tecumseh Intellectual Property Fund. So, Sanjay.
Sanjay, I think we got you on mute.
Yes, thank you, Ryan. Appreciate the opportunity to present today. So today what I'd like to do is take the moment and opportunity to talk about patent asset management generally. We won't be going into specifics on any particular opportunities. I just want to leave you with an impression on the opportunity in terms of an asset class, as a little background and education into the space. So with that, I will start with just a brief introduction to IP Edge. So IP Edge is an asset management company. It was formed in 2010. I'm one of the founders of IP Edge. I have two partners, Gal Bodapudi and Lillian Wong. We are all three patent attorneys with registrations with the patent office. We're actually registered patent attorneys that have had experience at large established law firms. Over the years, we've developed very deep connections with patent owners across the world. That's illustrated by just some of the opportunities that we actually work on as far as monetization goes. These entities and patent owners across the globe come from corporations, universities, and also patent holding entities or sovereign patent holding entities that different countries and organizations create to incentivize innovation in their respective geographic regions. We provide services to companies. We're seen as if you will, a service providers to companies that are small and large, small entrepreneurs, universities, basically corporates and companies that have assets, that have intangible patent assets, but don't necessarily have the expertise, the financial backing, or the wherewithal to create revenue from their intangible assets. We play a very critical role in leveling the playing field by helping these participants, these owners who don't have the skills, the expertise, and the financial backing to be able to compete and to realize the benefits of their intangible assets. Typically, this is seen through assertion against much larger companies that have significant exposure for infringement of the patents that are subject to potential investment opportunities. Just by very brief background, what is a patent? This is generally true throughout a variety of different jurisdictions. We'll focus on the US today. But a patent is a type of intangible property that gives its owner the right to exclude others from making, using, offering to sell, selling, or importing any invention for a limited period of time, okay? That is significant because it essentially gives the patent holder an ability to recognize value for their invention by trading this right, by allowing or permitting others to use their invention for what we call a licensing fee. Why are patents important? In exchange for this exclusionary right that the patent holder gets as a benefit for having a patent, they have to disclose, and this is all public, the invention that they've created, but also an enabling disclosure to give others the ability to actually benefit from the knowledge of that invention, actually use the invention. That can help innovation because it allows people to see different approaches to solving problems that can be then used to advance other technological advances and promote further innovation. Just as further way by background, how many patents are there? I mean, what are we talking about here? Worldwide, there are approximately roughly 16 million patents in force. This number from several years ago. This doesn't account for patents that are expired for term or maintenance. So patents typically have here in the US a maintenance fee that's required every 4 years throughout their term. And if you fail to pay that, you can actually have a lapsed patent. But if you look at everything that's active today, as reported from several years ago, roughly 16 million globally. The growth on this, the compound annual growth rate between the years of 1920 and 2020, which is pretty representative as a whole throughout each year, is roughly 6%. So you can see that there's a trend to have continual growth on patents, and I think that's attributed to the fact that technology is pervasive throughout all aspects of our life and the delivery of products and services. As far as distribution goes, worldwide distribution, we see the majority of patents that are issued and enforced here in the US, roughly at 3.3 million, China being a second, and Japan a third. And then it slowly rolls off there. Give you an idea of the velocity at which patents are filed and granted. In 2020, there were roughly 600,000 utility patent applications filed, and roughly a third or so of those granted in the US. It takes generally about a 3-year time period, can be more plus or minus a year or two, to get a patent from an application to actually get it granted. How do patent owners, including large companies, monetize patents? Well, large companies typically will have outbound licensing teams to support monetizing idle assets. So they'll typically routinely evaluate their patent portfolio, look at assets that may be non-core to their businesses, and look towards those assets for recognizing and realizing revenue. It's the smaller companies, the entrepreneurs, the universities, while they have a patent portfolio, they don't necessarily have the expertise, the capital, and the infrastructure or human resources to actually perform that outbound licensing. So these types of entities create value from their IP through typically divesting their assets to someone that can then realize the benefit of that IP through licensing, or partnering with companies such as IPEdge that has expertise in creating and executing monetization strategies. So IPEdge really is a platform for patent holders to outsource their IP value creation. Why are patents a compelling asset class? One of the lovely things about patents is that we find they are non-correlated to assets like stocks and bonds. IP licensing activity and returns are not linked to fluctuations in traditional markets. And we've seen that particularly play out this year in the inception of the Tecumseh IP Fund and its performance through third quarter of this year. Also, patents are resistant to interest rate fluctuations, or the strategy behind monetization is resistant to interest rate fluctuations. And that's because almost exclusively debt is not used to finance patent monetization activities. Therefore, interest rate fluctuations, when taken alone, are irrelevant to the strategies that we employ to create value from intangible assets patents. Why is this such a compelling asset class? Again, other characteristics of this asset class which make it favorable to investment, and we'll see in a later slide, the institutional dollars that are being allocated to this space is quite interesting. But the resistance to economic cyclicality, changes at the macro Fed level, at worst is considered neutral for our strategies and at best considered positive. The same cannot be said for stocks, bonds, and real estate. I'll give you some examples. In times of inflation, we tend to see the price of products and services increase. One of the factors when licensing patents is the amount of exposure or damages that a patent portfolio reads on. For example, the value of patents depends on the royalty of products and services that practice the invention. When you have increased prices of products and services, in theory, it results in a beefier royalty base, which is beneficial for patent licensing. Further, and we see this especially today, in times of recessions or times of inflation, we see companies are always looking to their balance sheets to see how they can manage cash flow and generate profits. They often turn to intangible assets like patents to determine how they can create revenue and shore up their balance sheets. And then in robust economic times, you have more products and services being consumed, greater innovation, which in theory leads to a greater royalty base from which licensing revenues will be generated. And lastly, RPX, a prominent trade press in this area, has an article that I can refer you to that gives a little bit more detail and support behind how IP performs in recessionary environment. Lastly, another characteristic why this is such a compelling asset class is the barriers to entry presents opportunities for meaningful alpha. It's not easy to participate in this field because it requires a specialized expertise in this field. I mentioned my partners and I are registered patent attorneys. We've had experience working at large law firms, both on the plaintiff side and on the defense side, as well as nearly 13 years as IP Edge working on monetization programs. So it requires specialized expertise to curate opportunities in this asset class. Also, having an efficient due diligence infrastructure, that can efficiently and economically evaluate which patents are more favorable for monetization strategies or investment opportunities than others is critical. Institutional knowledge is very important because with that, you get a better sense for what types of licensing and royalty rates are prevalent in the industry so that you can base your analysis and investment thesis on that institutional knowledge. Long established relationships are critical in this field because often we work with intermediaries or individuals that we've done prior deals with who've seen success with us and are interested in continuing that success for further opportunities. That demonstrated track record for performance creates greater velocity for deal execution and deal opportunity. Factors that contribute to opportunity curation are strong barriers to entry for just anyone to step inside. And in fact, what we see is institutional fund movement into this space relies heavily on a specialized and experienced market participant or participants to help provide that deal flow to those institutional funds. So who invests in this asset class? Well, one of the preeminent litigation finance press in the industry is Westfleet Advisors. They routinely report on the movement and the activity of litigation funders in this space. We see through them and being in the market, institutional capital deployment into this space is increasing. In their 2021 litigation finance market report, which was released Q1 of this year, they reported that a pool of about 47 litigation funders that are active in the US have about 12.4 billion under management. What was significant about their study is that in 2021, the percentage of new commitments in the space of litigation finance, or its patents specifically, patent litigation, comprised about a third, 30% of all capital commitments. With that, I would like to open it up for discussion. I'm happy to go back to particular slides and get more detailed if you'd like.
All right. I don't see any questions in the chat just yet, but I'll open it up to see if anybody has any questions right off the bat. Or Chad, any further comment on it?
No, thanks, Sanjay. That was terrific. Sanjay, are you seeing any trends right now? You're up in New York at a conference actually this week. Anything new in the industry?
Well, this week, for everyone's benefit, there's a conference called IP Dealmakers. You can look it up. It'll give you an agenda of what has been discussed throughout the week and show you some of the participants that participate here. But IP Dealmakers is really a nice conference because we get a lot of participants in the ecosystem. What do I mean by that? A lot of the law firms that are regularly appearing to represent individuals and patent holders that are asserting and monetizing through litigation are present at this event. We see a lot of litigation funders that finance the litigation and the costs and expenses associated with asserting patents in district court. We also see a lot of the patent holders present here to be able to network with and kind of meet in person a lot of the participants. As far as what we're seeing new, we're seeing a lot of insurance starting to play a role in the litigation finance space, which I would say is a new development largely in the last couple years, 3 years. We're seeing a lot more structure behind litigation finance with the use of insurance. We're seeing a lot of opportunities to acquire portfolios or to fund the monetization of portfolios. One thing that's unique about what we do and that is differentiated from the litigation funders that we see that are prevalent in the market, and the best resource for anyone interested in investigating this is to refer you to the Westfleet Advisory. They have what's called as a buyer's guide. It's a Westfleet buyer's guide for litigation finance. It'll give you a great, fantastic list of all the well-known players in this industry. But one of the things that sets us apart from that is that the litigation funders, their mandate is to fund claims, to fund litigation. So they fund the attorney's fees to the extent there are attorney's fees. They fund the costs and expenses, expert fees, deposition fees, travel, etc., for bringing claims, for asserting claims. They do not fund, this is what's unique, they do not fund any financial resources necessary to obtain claims or to help claimants be able to bring claims. So just to give you an example, we recently evaluated a very significant portfolio in the wireless space, and the particular patent holder was looking for an amount of capital upfront for its own business needs. And that's something that's unique, where we're uniquely situated to handle that. The traditional litigation funder won't even consider those types of arrangements because their mandate is to fund litigation. It's not to fund the acquisition of claims. So that's what sets us apart. But to answer your question, Chad, what we've seen new in terms of developments in the industry is a lot more insurance play and structured finance behind this asset class.
Interesting. Thanks, Sanjay.
Sure.
Yeah. Well, Sanjay, as you can imagine, with this being a very new asset class for many of us, there's a lot of questions coming in the chat now. So I'll just throw them at you and we'll run with that. So first one in was Terry said he joined about 5 minutes late. And I know we're not talking about deal specifics in this, but can you give us a kind of a broad range of what typical returns are on something like this?
Yeah, well, let me, I'd like to defer to Chad at Tecumseh based on what they forecasted for their fund. I just want to repeat, and I know this was mentioned earlier. So IPEdge is a sub-advisor to the fund, and the fund, we provide opportunities to the fund, but the fund actually, they're the finance guys that create the pro formas and such. So I defer to Chad on that question.
Sure. We projected returns in the fund of high teens. To date, the fund was launched in February, and to date, it's up about 4.5% inception to date over the last 8 months or so. But before we launched the fund, we took a very close look at IPEdge's history, and they were very transparent in terms of providing us tax returns with the various SPVs that purchase patents and which prosecute the patents, and we were able to get very, very comfortable with those projected returns for our fund of mid to high teens.
Great, thanks, Chad. And for both of you too, when these questions come up, I'm getting some of them direct, so I'll just go in order here. But feel free, whoever feels most comfortable answering the question. So next up, Zach asks, how does a typically funded investment work? For example, investment minimums, return period, IRR, expectations. How does that work? And Chad too, if you want to tag on to that as you answered in the previous question, feel free.
So I wasn't quite sure if that was a fun question or just in general.
Yeah, so it looks like this is, so it probably is a question more targeted to you, Chad. So investment minimum, return period, or hold period, and IRR expectations. Sure.
So the investment minimum for the left field group, anybody associated with that group, is $50,000. It's a 4-year fund. So the first 1 year's capital raising, the first 2 years of the fund is the reinvestment period. So any capital that comes back in the fund is put back out. And then all the capital and profits are returned to investors the last 2 years of the fund.
Okay, great, thank you. Next, Terry said, Mike is next. Sanjay, would you please go through an example? He says specific, but as specific as you feel comfortable, of a patent from purchase to monetization.
Sure, I'll give a general illustration of what is involved through that, and then if there's more specificity that's desired, I can get into that as well. So because of our because of the duration of our history in this asset class, we have a lot of relationships and intermediaries and direct relationships that routinely will come to us with opportunities. So when we have an opportunity that comes in the door, we assess it very quickly. We look at what technology space it is. We quickly assess the how long of a period of time the patents are still active, if there is any encumbrances or previous licenses on the portfolio, we take that into account and we kind of triage it. And having done this for close to 15 years or more per partner, we have a lot of experience that allows us to quickly triage a portfolio. So we'll quickly assess what we think the value is in the portfolio, and then we'll put together a plan to create a diligence strategy specific for that portfolio. Another aspect I didn't mention that we always look at is what's the expectation of the patent holder and their desired participation and structure for the deal. That goes into account. But what we do when we finally create a strategy behind diligencing the portfolio is we'll look at current use. Okay, that's critical to monetization. Monetization in the patent world really requires three things to account for, and it's infringement, or said another way, the use of that patented technology today and in the past, not in the future, okay? Not in the future, not for the potential for the future use, but today and the past. That's critical because the licensing fees and the royalties are based on actual usage, not the potential use. So infringement is critical. We look at how well the patented invention actually, to use our term of art in the industry, reads on or actually is directed towards a particular product and service that a company or infringer creates in the marketplace. Second is validity. This is a second prong that's extremely important in bringing an assertion or licensing a patent portfolio. You might have the greatest infringement theory in the world, but if the patent is actually invalid, or there's a likelihood or a strong likelihood that the patent's invalid, that can hurt your prospects of licensing. So there are certain proprietary things that we do based on our knowledge in the industry and institutional knowledge to determine how we feel about the strength of a patent from a validity standpoint. And third, which is very critical and quite possibly what we see as a very pivotal prong of patent due diligence, is the damages. So in order to have, you might have the best read on an ironing board, really strong infringement on an ironing board because of the mechanism that's used to close it. You might have a really good position on validity, but you may have a weak, you may be very weak on damages, or the sales of that product may be low to the extent where it's not even viable to bring an assertion or licensing effort on that. So those are the three prongs we go through. We have a proprietary due diligence process to go through each prong. The outcome of that effort internally is a decision on what we value the portfolio and what our strategy is to create value, to actually execute and realize that value. And then we go back to the expectation and the structure that's desired to see if there's a match. Okay, you might have everything line up on infringement, on validity, on damages, but we have a value mismatch or expectation mismatch. Those instances, we explain to the patent holder what we feel about the portfolio and why, given our experience. And in cases where we have a mismatch, maybe there's another intersection point. For those scenarios where we do have an intersection point, that then becomes an investable opportunity. Investment can occur in several ways. Investment could be, as I mentioned earlier, one thing that differentiates us is that we do have the ability to provide capital upfront, either for the acquisition costs or any costs associated with that patent holder divesting their interests. And also we have the ability to finance the assertion efforts, which could be in litigation or outside of litigation. So that's an example of how generically, without going specific into a specific opportunity, how we source our opportunities, how we diligence our opportunities, and then how we execute the purchase or monetization of that opportunity. I'll add a little bit more to that just to take it through its entire life cycle, which is when we begin the assertion or the licensing strategy, we will employ the use of outside law firms that will actually execute our strategy. Those same law firms are used in our proprietary diligence, and other law firms are used in our proprietary diligence methodology, so that we can have other eyes look at the opportunities to make sure we're not drinking our own Kool-Aid.
Great, thank you. Chad, I imagine this next question is, would a patent holder or developer contact Tecumseh directly? So I think that's getting at probably something that Sanjay, you and your team would deal with. The investors, Chad, would reach out to you directly, but a patent holder or developer would be in contact with Sanjay's team. Is that right?
Yeah, I mean, if somebody reached out to me, I would just refer them to Sanjay. So either way, it's fine.
Okay. And Sanjay, on this next question, I think you answered a lot of it previously, but feel free to add on as it's phrased in the question. Does IP Edge look to develop portfolios after purchase, or do you primarily only deal with granted patents? Relatedly, when evaluating a potential deal, what are some of the primary factors you consider? Examples are market potential, strength of the individual patents, size of the portfolio, pending families. So again, just to add to it as you see fit for the previous question.
Yeah, thank you, Ryan. I'm happy to. We yes, primarily only deal with granted patents, and I should say it more accurately is that the investments and the opportunities that we focus on are ones that do have granted patents. If there are no granted patents, it's not ripe enough. Okay, for the reasons I expressed earlier, which is you need the opportunity to have current use of that patented technology. If the patent isn't granted, there's no patent, which means there's no infringement. Routinely, patent portfolios that we work on do have patents or do have patent applications, and we can work on those applications to help get them into a position where they do become a granted patent. But in all instances, everything we work on will have at least one granted patent. As far as when evaluating a potential deal, I mentioned generically some of the factors that we consider. I'll just review. As far as market potential, we don't necessarily look at potential as in what the market will be in 5 years. We look at the size of the market today and make sure that there is use of the patented technology today. And significant enough use today that it warrants and merits a significant licensing effort behind it. As far as strength of individual patents, we view that in 3 ways because of the prongs involved. One, the strength of infringement, or the strength of the way the claims are directed to a given product. So that's one way we look at the strength of an individual patent. We look at the strength of its validity, how we think it is positioned with respect to other technology that came before that patent came to be. And then lastly, as we just discussed, we look at the size of the market or the damages, the potential royalty base that's attributable to these patents. Size of the portfolio is pretty agnostic. Surprisingly, to many, we've worked on patent portfolios and asserted with success patent portfolios with as little as one patent, and then we have portfolios that are in the hundreds and in even one case in the thousands. Pending families. This goes back to an earlier question: do we develop portfolios after purchase, or do we primarily only deal with granted patents? We always need a granted patent. We do have pending families within portfolios, and then we will work to enhance those pending applications, those pending families, and to realize further granted patents that we can potentially license.
Okay, thank you. Again, any of these questions that you feel like you've answered a lot, just if there's anything to add from the rephrasing of the question. So next, Rob is asking, are most of the returns due to pre-litigation settlements or from judicial decisions? And in either case, what is the typical time span from obtaining a patent position and fully monetizing it?
Yeah, great questions. I don't know that we've addressed these, so I'm really happy to address them now. So most litigation, what we find, and I don't know that this is unique to patents particularly, but most litigation, to the extent patents are monetized through litigation. So just to be clear, there are many different avenues to monetizing patents. Two primary ways. One involves, and I'm only going to talk about 2 primary ways. One involves litigation. So one actually where you assert the patents in court, in federal district court, and allege infringement. Another way is to go directly to a corporation that you believe is infringing and have what we call out-of-court licensing discussions with them, assert the patents out of court. The question is talking about litigation settlements and pre-litigation settlements or from judicial decisions. So what we find, which I don't think is unique to patents, is that most assertions, most litigations do not result in a judicial decision. or I should say, do not result in going to trial, do not result in obtaining a jury award. Most of the opportunities to create value from a patent portfolio are realized way before there are judicial or jury decisions. Now, there will be judicial decisions that will impact the value of a portfolio through the lifespan of a litigation. For example, early on, there may be decisions on how the judge or the court views a particular provision in patent law, 35 USC 101, which is to determine whether or not the claims are directed to abstract subject matter and should not have been issued at all. That happens routinely early on in a case. Then there's opportunities, what we call claim construction. Claim construction is the court actually construing the claims of an invention, and that decision, that construction, that will determine the strength for each side in a case. So those are judicial decisions that can influence the value of a case throughout the lifespan of a litigation. But most of the returns that are created throughout litigation are not necessarily because there's an order by the court saying, hey, you must pay X. It's typically through settlement, and that's what we find. As far as pre-litigation settlement, well, pre-litigation would mean it's before litigation. And typically what we see before litigation is the ability to license either from a portfolio that has been through litigation, so there's an appreciation of the strength of the litigation, or because of some proprietary relationships or institutional knowledge, we go to individuals, corporates, but individuals at those corporations to create returns from licensing. As far as the typical time span for obtaining a patent position and fully monetizing it, this is also what's unique and lovely about Tecumseh, the fund itself. IP Edge as a sub-advisor, it can take several years to curate a portfolio, to curate. And when I say curate, it's not us necessarily developing the portfolio, but it's us working with patent holders to triage their portfolio, to identify patents, to create a strategy, and then make it available for Tecumseh to consume as an investor. So that period of time can be 1 to 3 years. But once you get to the position where it's a consumable, investable patent position, as it's worded in the question, through litigation, we typically see litigation's trial dates around the 2-year mark, depending on what district you are in the US. Could be 3 years, generally speaking, around 2 years. And as I mentioned previously, most cases will settle before you go to trial, before you go to a jury. And so we routinely will see settlements or the ability to obtain a potential licensing outcome before a 2-year mark once litigation is brought, if that's the path that's chosen for monetization.
Okay, thank you. Next question, and you've alluded to a couple articles and resources, but are there more resources available to learn about the asset class?
There definitely is. If I were to refer you to just a couple, I would take the time to tell you about Westfleet Advisors, and only because they really do a nice job of publishing information that they've researched and make it available to the public. It's Westfleet Advisors. If you Google them, a couple of the resources that I would refer you to, they have a buyer's guide, a litigation finance buyer's guide. It will list all the different litigation funders, not just to IP, not just to patents, but in general, but many of those, and it will tell you which ones do patents that participate. That's a great resource to find out who's a participant. And then you can go to their respective websites and Google and read more about their different strategies in terms of investing in this asset class. They also have, as I alluded to earlier, a litigation finance market report. And the most recent one is last year's report, 2021 calendar year, that they released in Q1 of this year. And that's something that I can certainly make available to Tecumseh, something that we can pass along to you, Ryan, so you can feel free to distribute that. As a second resource, kind of generally, I might refer you to RPX Corporation. I think it's rpxcorp.com. They are one of the preeminent trade press in this industry. And that would be a good place to get a better sense for who are the participants and what kind of different strategies there might be in the space.
And we do actually have some background articles in our deal room that might be a good place for anybody to start who wants to kind of start getting up to speed. So happy to make those available to anybody.
Great. All right, last question we have in the chat, unless anybody wants to throw any more in there, is what technology spaces does IP Edge specialize in?
Well, the beauty about IP Edge is we're technology agnostic. Okay, there are three prongs that we look at primarily, and I've mentioned this before, but it bears repeating because this really is the secret to an evaluating a patent opportunity is infringement, is validity, and damages. So how well does the patent portfolio, how well is it directed to a particular group of products and services, and how strong that mapping is, that correlation is between the patent and the product itself. Does the product do everything that the patent says that's patented? Number one. Number two, validity. How strong is this patent in terms of, wow, it really is an innovation that other technologies didn't have at the time. And then third is the damages. And I mentioned this again, but it definitely bears repeating, is what's the significance of the products that are infringing? Okay. And so when we talk about technology spaces, there are certain technology spaces that may be ruled out. For example, nascent technologies that don't have as great of an adoption aren't necessarily candidates for strong damages, and therefore aren't candidates for technology spaces that we would currently seek opportunities for investment. So when you ask the question, which technology spaces does IPH specialize in, we're agnostic in terms of the type of technology, but we focus on technologies that are ubiquitous and they're prevalent in all products and services today. And we do that because one of the prongs to evaluate a patent opportunity is the scope and size of the damages or royalty base. So that's a way we determine how we stand on that prong. Let me just leave you with this, just to give you an indication of the different types of technologies we have worked on and do work on. Prosthetic devices, so medical devices, any type of semiconductors. It could be semiconductors at the called the substrate or the transistor level. It could be at the circuit level, and it could be at what I'll call more the processor level, or the called the black box level. Other technologies, cloud. I kind of put this under a cloud computing umbrella, but it has different technologies within that, like deep linking. It has a way of resources that are used efficiently, quality of services. How do you allocate demand with resources, etc. We have wireless charging as an example of another technology. I'm just thinking through. All cellular being 3G, 4G, 5G, LTE, 4G, LTE, both on the network side. So the carriers, the wireless carriers that provide the services, on the hardware that's used or the base stations that are used in the network, and then the user equipment side. So those are just a non-exhaustive exemplary list. And there's more that I'm not mentioning. And if we have more time and people are interested, I'm happy to give more examples.
Great. No more questions in the chat. Chad, do you have anything in particular you want to add to what Sanjay has presented?
No, not really. I think that hopefully gives everybody a really good overview of the strategy and the attractiveness of investing in intellectual property. And just want to thank Sanjay for your time today, and Ryan, thank you very much again for inviting us to present to your group. And we'd love to hear from anybody and answer any questions at all.
Yeah, we appreciate Chad the opportunity, and Sanjay for your expertise in the asset class. I know it's something that I don't have any expertise or familiarity with, so I'm interested in learning more about it. And Chad, you have your information here on the screen. Is that the best first contact for anybody that's interested?
Yep, absolutely. Send an email or a phone call. My two partners, I apologize, I should have mentioned, are also on the phone, Simon Clark and Mike Bellitz. You can reach out to any of the three of us, and we'd love to see how we could help.
All right. Well, we will, we've got this meeting recorded if anybody needs to go back to it for reference, or anybody else who wasn't able to make the call today. Sanjay and Chad and team, we thank you for your time today, and look forward to learning more about it.
Likewise. Thank you, Ryan. Appreciate it.
Thanks,
Thank
guys.
you.
Okay, take
Bye.
care. Have a good weekend. Bye-bye.
You too.